What's going on, guys? We're going to do a little breakdown of the 20 SMA strategy. So again, on the NQ, on the Nasdaq, and overall tech, we're on a little bit of a continuation day from yesterday's monster move. I only took one setup here on the Nasdaq, and I'm going to get to that setup in just a moment. But the setup that I teach, the strategy that I teach here on YouTube, is the 20 SMA play. You guys are pretty familiar with it. I've made enough videos on it. All we're looking for is short-term change in trends over or underneath the 20-day moving average on a 5-minute time frame. Now, particularly speaking, depending on what the macro time frames are looking like, the daily, the 1 hour, the 4 hour, if we're oversupply, which yesterday we reconfirmed some areas of supply on the big move, we want to predominantly be thinking long. Now, the problem that tends to happen in these monster moves with very little to no pullbacks is a lot of traders will try to assume where the market's going to pull back. They try to guess where the market's going to pull back. They don't want to believe that the market can continue to go higher. And that's typically when you begin to get trapped and you get chopped up. So kind of stay on the same side of, whichever way that the market is free flowing, right? We don't want to run against the train. We want to run with the train. We want to be able to jump on and go with the train. We don't want to run opposite direction. So if we kind of just look at the price action from the NQ. Now, again, this is my big chart setup here that I have in Thinkorswim on the Thinkorswim platform. Again, I don't particularly day trade off of this. I normally have this chart off to the side on a separate monitor where I can just kind of quickly look over at it and kind of see if I've got any supply and demand zones that I need to be careful of. And typically what I'm looking at while I'm day trading will just be a chart with just empty, with just a 20 SMA on it, and I'll kind of draw in some supply and demand zones as we go along and reference this chart on the other monitor. Market's going to open up here. It does close over the 20 SMA. However, there's no confirmation, so there's no play. Close below the 20 SMA, there's no confirmation, there's no play. Now at 6:55 Pacific Standard Time, we get our first close over the 20 SMA. We get a confirmation here at 7 a.m. Now we get a quick confirmation followed by a quick pullback. But if you notice the candle that closes over the 20 SMA, it's a 34.5 point range. So when you're looking at a potential setup and it has 35 points, let's say, of potential risk, from there, you need to quickly do math and you need to quickly figure out how much size can I put on the table. If I trade one micro contract and I lose a full 35 points, I'm going to be down around $70. If I trade two, I'm going to be down around 150. If I trade three, so forth and so forth. So kind of from there, adjust your position sizing to see how much or how many contracts that you can trade. Let's just use this example and let's say that we're comfortable with trading 2 micro contracts. So if we do take a loss, we're going to lose about $140 to $150. That's okay. I'm willing to risk that on this one particular trade. Now, what we would be targeting is a 1-to-1 bare minimum. So I at least want to make 35 points. So if we notice from a high price of 16,705, we would be looking for a target of around 16,740. Okay, so you would get that here. On this candle, we go from a price of, the low price was 728 all the way up to a high price of 747. So in potentially 10 minutes, you're getting that 35 points. Now, this is a fantastic move here. Again, it does pull back, does break once again. You could have definitely been in this trade for a lot longer period, but it's all dependent on the way that you trade. So if you have your rules and you're set up to, when your entry hits a 1-to-1 profit target, you're going to at least take some profits off the table. We'll use the same example. We're trading 2 micro contracts at 35 points. We're going to at least sell 1 contract. So we're going to for sure lock in that $70 on that one particular play. Now our original stop loss is going to be down here. So if it was to come all the way back down and hit our stop loss, then essentially taking profits, giving some back, we would break even on the trade. Now you can use other variables to kind of trail your running contracts. And that could be, you know, maybe the 5, maybe the 10, maybe the 50, maybe the, you know, linear regression, maybe the 20. It doesn't really matter. It's going to depend on what you want to risk, what you want to risk. Now, it doesn't matter what I want to risk. It doesn't matter what someone else risk. What are you comfortable with risking? Okay, let's continue the story. The trade that I actually took was a break. Let me get the right drawing tool out here. The trade that I took was a break of the 200 SMA. Okay, on a 5-minute time frame. So the 200 SMA is this yellow line here. You can see that we're kind of quickly approaching this 200 SMA. We kind of tag it, we pull back, we tag it, we pull back. So I'm looking at some consolidation in this zone. And if we break this zone, potentially we can catch a bigger move. So I anticipate the break as we're getting through and approaching this 200 SMA. I enter in on the play over the 200 SMA, over this previous swing high. And all I'm looking for, this range on this candle is around 28 points. All I was realistically looking for was around 10 points, 12 points, because again, a lot of times you break a big area of supply, it puts in this high and it pulls back. So I traded my normal size, got stuck in a little bit of a drawdown here. But one thing that I do want to point out is that we stayed above the 5 and the 10 SMA. So even though typically, you know, this pullback here can put you into, you know, some red P&L, you kind of have to either give it a previous 5-minute close as the low, as your stop loss, or either use the 5 or use the 10 or use the 20 as your max pain stop loss. So if we close below either one of those, or you close below your previous 5-minute candle, you've got to get out. But as long as we're continuing to hug these moving averages, now your 5 SMA is going to be your power trend, your 10 SMA is going to be your, you know, your birth of the trade, and then your 20 SMA is going to be your short-term change in trend. Okay, so the change in trend happened here. So the trend is bullish, your power trend is the 5, and your kind of birth of a potential new trade could be in between here at the 10 SMA. So as soon as we pull back, we come back a little bit green. As soon as this candle opens up here at 8:15 a.m. in Pacific Standard Time, I just sell on the run up. I didn't catch the whole thing. I just sold for a little bit, took a small piece of the pie. Again, I was trading some options. I had some money on the table on the option side of things. So, you know, for those of you guys who know me, I spend time looking at the NQ charts, but it's not like I'm trading them all day. This is not where the majority of my money comes from. And that's just full transparency. It's not because, you know, I don't like the futures. It's not because anything like that. I've been trading for 9 years. I trade options. It's how, you know, I pay my bills. It's how I survive. So I've got to focus on where my personal account big money is. The prop firms and the futures accounts, it's like a side income. It's, you know, it's a secondary job. So if I can manage to make, you know, $500 a week, $1,000 a week, you know, $200 a week, I look at it as extra pocket change, and that's how I kind of treat it. So it's a lot easier when you're in that type of situation where you're not relying on payouts from the prop firms. Now, if trading prop and trading futures is your sole source of income in trading, then I get it. You can definitely feel the need and the urge to want to push the trades, you hold trades longer to make more money. I get it. So you need to figure out your psychology and your goals first. Again, you know, should I have sold on this run up? No. I should have realistically held until we at least closed below the 5 SMA. You know, again, but you know, I'm not perfect. I'm not a perfect trader. You know, I get into these trades. I just look for a quick pop and I look to get out. It's definitely something that this year I would like to focus on working on more. is, you know, holding those potential trades to allow them to work out longer. I do a fantastic job with them on the option side of things, but I don't do such a good job at it with the futures. I can identify setups all day long. I can assess my risk, no problems. The problem that I have right now with futures is allowing these trades to work, allowing them to actually stretch in my favor. But again, you know, as a trader, we always have something to work on, and that's something that I need to personally work on. As far as the next play that sets up on a 20 SMA was a short position. Now, again, if you're sticking with the theme where you're going to not take reverse trend trades, then you would have ignored this trade. This trade, however, was a 14.5 point range. Essentially, it had 14.5 points before you were going to get out of the trade. It did hit for a 1-to-1. If you're a little bit of a riskier scalper, a little bit of a riskier trader where, you know, you don't have a problem giving up those 14 points, then I could see how someone would have taken this trade to the downside as a close below the short-term change in trend 20 SMA was confirmed. It did have room down to the Bollinger Band as well as this 50 EMA. So again, you know, is it, you know, should you be fired if you didn't take this play? Of course not, because this play is going against today's trend. So I can see how someone would have wanted to ignore this play. However, I could also see how someone who was a little bit more aggressive with their trading style could have taken this play. And if you did take this play, for the sake of this video, for the sake of the strategy, it did hit for a 1-to-1 price target. We currently have a new close over the 20 SMA that has yet to confirm. Normally, I mean, it confirmed actually. Let me actually be very, very clear. The high price was 16,855. The high price here was 16,856. So yes, if you are looking for that exact tick to get in over a 20 SMA confirmation, this play is intact. You are sitting in a little bit of drawdown right now. My stop loss would either be below the 20 or a 1-bar stop, which a full 1-bar stop is risking 26 points on the trade. So depending on how green you are on the day or how negative you are on the day is going to determine how many contracts you should be playing here. Now, if you're up $200 on the day, I'm not going to be risking a number of contracts that could potentially, if I lose 26 points, could cause me to lose $200 on the day. I might be trading one to where if I do lose this trade, I'm only going to lose $50, and now I can close shop and walk away with $150 total profit. Let's say, for example, you did something funny over here, something weird where, you know, you were shorting, you lost money, you're shorting, you lost money, and now you finally made a little bit of money here, and then you went long here, and you're down on this position, which looks like it could very well be getting stopped out. That's not trading with a specific plan. It's not trading with specific rules. If you're chasing a loss P&L, meaning you're, you know, let's say you're down 250 and you're just taking trades, setups for the sake of trying to win that money back, you've already failed yourself. I believe that everyone should have a hard daily loss limit, whether that is enforced by your, you know, your broker or your platform, if you have the option to do that, or you have a mental daily loss limit where, let's say you've got a $2,000 account, or you're trading a prop firm account where you have a $2,000 drawdown limit. I would recommend risking no more than $200 to $250 a day. If you do hit that daily loss limit, you need to stop trading. You need to come back tomorrow. Looks like if we do close that this is going to get stopped out for a full 25 points as we're watching this trade live. So again, you know, it is what it is. Do they all work like this one? Of course not. Do they all work like this one? Of course not. Do they get stopped out? Yes. That's the name of the game. That is probabilities. And that is why we do this business. Again, this is not the most exciting business, guys. So again, if you manage to find yourself green on the day early, I would always recommend to not trade after lunch. If you are profitable before lunchtime, do not trade after lunch. It's going to protect you. It's going to save you. It's going to, you know, allow you to continue to do this business for a long time to come. But I notice in just the experience that I have in talking with hundreds of traders and doing these coaching calls, the traders who continue to sit on the screens longer generally have more trouble becoming profitable and end up blowing themselves up at some point in time of the day. My sweet spot is generally before lunchtime. Okay, during lunchtime and after lunchtime, I really don't trade as much. Although I'm just like you, I'm human as well. I will take trades after lunchtime if I am sitting here, but I do find myself that those moves generally for me, it's not worth the risk, right? It's not worth the risk. Do you win some? Yes. But do you lose some? Yes. And do you give back some of the early morning profits? Yes. So for me, another thing in 2024 is to definitely work on not trading as much after lunch, and also futures, holding those runners longer, as long as technically I still have a reason to be in a trade. Hope you guys enjoy this video. If you guys do want to trade with me, you guys want to learn, you guys want to get access to the mentorship and community, I have 3 spaces available. That link is down in the description box below, or you can visit evolutiontraders.com, sign up there. I'll see all of you guys on the inside.